Hello, and welcome to Virtual Investor Conferences. My name is Anthony Kraus, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from Southern Silver Exploration Corp. Please note, you can submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Robert McDonald, Vice President of Exploration of Southern Silver Exploration Corp., which trades on the OTCQX Best Market under the symbol SSVFF and on the TSXV under the symbol SSV. Welcome, Rob.
Thank you very much, Anthony, and thank you to the OTC for inviting me to present in this virtual conference. My name, again, is Rob McDonald. I'm the Vice President of Exploration with Southern Silver, and today I'll be speaking to you about our Cerro Las Meninas project, which we are looking to turn into the next major silver mine in Mexico. This is a slide to indicate that I will be making some forward-looking statements, but also to identify the number of qualified professionals that have worked with me and contributed to the disclosure in this presentation. These include Kirkham Geosystems, that did the mineral resource estimate for the project, Entech Mining, mine design, OpEx, and some capital. Ausenco pulled much of this together, but they also did the mine site design, OpEx, CapEx, and processing. And then Metallurgical Process Consultants, which did metallurgy as well as contributed to the process flow sheet as well. So in terms of Southern Silver, we're focused on the development of the Cerro Las Meninas silver lead zinc skarn system located in Durango, Mexico. This is currently one of the largest and highest grade undeveloped silver-based projects in the world, with mineral resources totaling over 300 million silver equivalent ounces in the indicated and inferred categories. It's roughly 35% in the indicated category and 65% in the inferred category. The project is located in a well-established silver mining district in southeast Durango, and we're surrounded by major companies. We issued a updated preliminary economic assessment of the project. The results were issued on June 10th of this year, and we are literally just in the process of filing the report on SEDAR, and it will be available on our website very shortly for anybody that wishes to review. We featured some very robust results with a 17-year mine life, some excellent project economics, high revenues and free cash flow, in a project that is very strongly leveraged to silver and zinc prices. So again, it's something to keep an eye on. A lot of the analysts out there are suggesting that precious metals, gold and silver, are due to see rapid price increases, and this is a project to watch out for because of the strong leverage to the silver price. We own the project 100%. We have a treasury to continue our ESG initiatives, permitting, some drilling, as well as some additional engineering and corporate objectives. So again, we have announced the PEA results. I'll be summarizing them in the presentation. We are planning further drilling on our CLM project. We have two other projects, the Oro and the Hermanas project. They're located in southern New Mexico. I'll have a very quick update on those as I go through the presentation. So back to Cerro Las Meninas. Again, one of the largest and highest grade undeveloped primary silver assets in the world. You can see the indicated and the inferred resources. Key about this is that we contain 126 million ounces of silver alone within the resource, as well as 2.5 billion pounds of combined lead and zinc within the project. And compared to our peer group, you can see where we sit. And what we're looking at here on the x-axis is the tonnage, so how large the deposit is. And then on the y-axis is the grade. And so clearly there's a number of projects that are much bigger than us in terms of tonnage. They tend to have lower grade, and so you can see Cerulasmenitis highlighted here in the goldish orange bubble, and it tends to have higher grade than some of these larger deposits. We tend to have, as significant resource base as some of these larger deposits by tonnage. Again, there are clearly projects that have a higher margin or higher grade than ours, but we tend to have more tonnage and therefore a larger resource base. And you can tell the resource size in this graph by the size of the bubble. Capital markets profile. You can see a summary of the capital structure. We've just recently closed a tranche of financing for the company, and so this is updated as per that recent close. So market capitalization of $84 million Canadian. The enterprise value per ounce in the ground is around 0.3. So we feel that is undervalued as it sits right now. And then the P versus NAV at 0.17 times. Again, we feel that is undervalued. If you want to get some third-party analysis of our company, look to Red Cloud Securities, and that's Tim Lee that covers us with Red Cloud, and Sid with Fundamental Resources. Research, covers us as well, and they've had recent summaries of the company indicating higher recommended prices than we are currently trading at, and we're again in this 25 to 30 cent Canadian range. So getting back to the PEA, and this has been work that we've been doing for 18 months. We issued an earlier PEA in August of 2022. We identified a number of things that could be improved with that work, and over the last 18 months, we've been bringing all that together, and it's culminated in this latest update, which we issued in early June. The PEA features very robust economics with an after-tax and an NPV 5% discount of $501 million US, internal rate of return of 21.2%. The leverage to the silver and zinc price, if you start looking at your base case plus 20%, the NPV at a 5% discount increases to $875 million US with an internal rate of return of over 30%. Again, you can see the base case metal prices, all very reasonable, and even the base case plus 20 metal prices are all metal prices that we've seen lately. And in fact, when you compare to spot prices, we're trading in terms of gold and silver, at least. The current spot prices are trading higher than the base case plus 20% metal prices. So the PEA models a large underground mining operation with a 17-year mine life with an annual average plant feed of 14.3 million ounces silver equivalent. That includes 5.8 million ounces of contained silver, which again, for silver-based mines, production of 5.8 million ounces of silver is a very significant silver producer. And so that's just the silver that we're looking at. The life of mine feed totals 242 million silver equivalent ounces. Life of mine sales, and this is after all the deductions, processing, transport costs, etc., is 194.3 million ounces silver equivalent at an all-in sustaining cost of $13.23 $13.23 per ounce equivalent sold. This is a high revenue project totaling $4.5 billion US, with gold and silver representing 45% of revenues. Zinc comes in at 35% of the projected revenues. The project has a capex of $388 million, and the NPV 5% to capex ratio 1.3 times, with a paydown of 48 months. And again, the project is very well located, surrounded by excellent infrastructure in southeast Durango State. So in comparison to the earlier economic model, we've increased the life of mine production by 5 million tons. That represents around a 20% increase. We've increased the daily production up to 5,300 ton per day, representing an approximate 18% increase. We've extended the mine life by 2.6 years, increased revenues by 765 million compared to the 2022 model, and we've increased the after-tax NPV by 45% and increased the internal rate of return by 3.3%. So again, straight across the board, this has all been good news in the continued development of the project and getting it closer and closer to a place where it could be advanced to pre-feasibility or feasibility, and then onward to a production decision. So in terms of the group behind the company, we feature an experienced management team and board with a history of success, particularly in Mexico. You go down through the resumes of all the people identified or working with the company, and you see people that have been behind on both corporate and technical levels to world-class deposits. These may include in Mexico the Peñasquito deposit, the San Nicolas deposit, as well as smaller projects like Nuestra Señora as well. But as well, there's people with broader experience, again, with world-class deposits, and they know what major projects look like. They know how to systematically advance the project to a production decision, either within the companies that they're operating with, or through a sale or joint venture of the company to major producers that put the project into production for the benefit of the shareholder. So going back to the project portfolio, we have two earlier stage projects in southern New Mexico. These are the Oro and the Hermanas project. Oro is a large laramide copper porphyry system. Hermanas is an earlier stage gold silver epithermal vein system, and I'll touch on those towards the end of the presentation. The flagship again is the Cerro Las Manitas project. It sits within the heart of the Faja de Plata, or Belt of Silver, of north central Mexico. And again, we're surrounded by world-class deposits. We're surrounded by producing companies. This is a silver-enriched skarn CRD system. We've spent over $28 million in acquisition and exploration since 2011. We've just recently updated the economics, and there is further upside both on the exploration and engineering basis as we continue to move the project forward. This is a very safe jurisdiction that we're located in. We're located in the Altiplano. So this is east of the Sierra Madres. It's east of the mountains. We're out of the way of the narcos. We're out in agricultural land, out in the plains. And so again, it's a very, very safe jurisdiction to be working in around civilization. We're located just 70 kilometers northeast of the city of Durango, and we have two federal highways, a railway, and a power line running right through the property. We operate the project out of the town of Guadalupe, Victoria. On the graphic on the left, it's that town. On the bottom of the graphic, Guadalupe, Victoria is located just 6 kilometers to the south of the area of the Cerro, and that's in the upper part of the graphic. And that's where we have our mineral resources. That's where we're designing our mining plans. Guadalupe, Victoria is a fairly large town, over 35,000 people, and it acts as our base of operations. We have our exploration permits in place. We have social license initiatives, exploration access agreements with the two ejidos that overlap our property. And our exploration and development team is embedded in the town of Guadalupe, Victoria, embedded in Mexico. Effectively, the face of Southern Silver in Mexico is Mexican. Our legal representation is based out of Chihuahua. Our administration based out of Parral. Our two project geologists are Mexican nationals, and we source our geotechnical team from source and train the geotechnical team from the local population in Guadalupe, Victoria. This is Cerro Las Manitas. And you can see in the foreground part of the divided federal highway. It's a toll highway that runs between Durango and Torreon. That sits in the foreground only 200 to 300 meters away from the mineral resources that we've identified at the Cerro. You can see some of the agricultural fields in the foreground. They grow beans for heel. And you can see the Cerro, which is a zone of skarn alteration that pokes out of the altiplano. We've identified several mineral resources wrapping around the Cerro, and you can see the overpass over the federal highway that comes from Guadalupe, Victoria, and acts as our access into the project. This is my only geological maps here. This is a classic skarn CRD system. It features a central monzonite intrusion that's in that purplish color, mauve color in the center. Mineral resources wrap around the central intrusion. They are hosted within a skarn-altered halo around this central intrusion. You can see those mineral resources outlined in red and shaded in yellow. On the right, I show a 3D depiction of the mineral deposits, and you can see the central intrusion in that sort of purplish or mauve color, and in red are the mineral deposits wrapping around the central intrusion. You will note on the western side of the central intrusion, mineralization extends about 1 kilometer below surface. On the eastern side and the northern sides, the mineral deposits have only been drilled down to around 450 meters below surface. And so that leaves further exploration potential both down dip of these areas as well as around the north end, potentially connecting the North Fell site with the skarn front mineralization. And I'll get to that a little bit later in the presentation. This is a breakdown of the mineral resources. Again, 302 million silver equivalent ounces, 126 million ounces of silver, and over 2.5 billion pounds of combined lead and zinc. Getting back to the PEA and the highlights, these are the economics. So again, 17-year mine life, the base case economics at a 5% discount, over 500 million US NPV, internal rate of return 21.2%, high revenue project, and again, a very good balance of precious and base metal revenues, 45% of the revenues from gold and silver, 35% from zinc. You can see the after-tax free cash flow. And again, it's quite significant that, we're looking at, for the first 8 years of the project, over $100 million annually in free tax flow for the project. And on the graphic here, I've shown the base case in blue, the base case projected free cash flow in blue, and then the base case plus 20%. And again, the values are indicated in the footnotes. They're indicated in gray. So of course, with higher metal prices, we're going to see a quicker pay down, going to 3 years versus the 4-year pay down. And so you see that in the free cash flow as well. So we have, of course, these projects is going to be sensitive to a number of different factors, most specifically metal prices. And so you can see we have the base case metal value, or the base case economics summarized in the table on the right. Base case plus 20%, and then at the end of May, we had very high prices Silver was 31.50, gold was 23.32. Copper was a bit higher, lead was a bit higher, and zinc was a bit higher. So at those spot prices, you could see that the effect on the economics of the project, with an NPV at a 5% coming in just under $1 billion US. Internal rate of return pushed well over 30% at those spot prices at the end of May. And you see the relative impact of the biggest impact is metal prices. And you can see with every 5% increase of silver on the base case value of $23, you start seeing $41 in extra value going right to the bottom line, right to the NPV at the 5% discount. So again, looking at the model production here, this shows a breakdown of how your silver equivalency, and then all of your metals reported as a silver equivalent. And so you can see in the first few years, we've been very good with our scheduling to get a lot of the gold enriched, the silver enriched mineralization reporting to the mill in the first 8 years. Then it tends to drop off. You tend to get more zinc mineralization then reporting to the mill. Again, some of the highlights here. Annual sales of 11.4 million ounces silver equivalent, peak annual sales of over 18 million ounces silver equivalent, and that's in year 6. You can see that highlighted in the graphic. Life of mine sales, 194 million ounces silver equivalent. All-in sustaining cost, very competitive, $13.23 an ounce sold. There is further project upside. We have resource expansion. We'll get to that in a couple of minutes, as well as mineral processing. So the further opportunities, mine life extension. On the northern side of and eastern side of the Cerro, mineralization can be extended both laterally on the northern side of the Cerro and at depth on the eastern side of the Cerro. Infill drilling often upgrades the value of the mineralization that you have in the project. We have specific recommendations in the technical report that suggest for those first sort of 6 years, 4 to 6 years of pay down, start drilling out some of the inferred mineralization and upgrading that to indicated mineralization to de-risk the project and add value that way, as well as there is some continued metallurgical upside. We do have work on pre-concentration or what's called ore sorting, and we have work on that was very, very favorable. Again, it's documented in the technical report. We did not include that in the base case study because the technology is probably still developing a little bit, but there is continued work to do and test work to do that could add significant value to the project by reducing capital and operating costs to the project by pre-concentrating your mineralization before it goes to the mill. Getting back to the exploration potential, we've identified around 25,000 meters of drilling. You can see the proposed drill holes for 2024 into 2025 here. We've identified as a first phase program drilling around the North Fell site and in the North Skarn and Skarn front areas. That's around 11 holes totaling 5,000 meters. And we're looking to start that in September. And so we should be looking at continued news flow through the fall and into 2025 from drilling on the project. So we continue our pathway to production. We've identified permitting parameters. We're in the process of getting our environmental and hydrology baseline studies. So those things are ongoing. Social engagement is ongoing. Including preparation of exploitation agreements with the local ejido, and continuing government engagement on the state side. We've met some of the state officials. There is a new governor in place and so we do want to engage further with the state officials, get them backing the project as well. And then we also have some technical studies. So for the infill, we've completed most of that work. And then we've established targeting to continue growing the resource to over 40 million tons. And that may put us in the frame of some of the larger integrated miners. For Oro and Hermanas, very quickly, because it looks like I've run out of time here or running out of time here. So Oro is a large porphyry copper deposit. It's located in southeast Durango. We completed some drilling, identified some new targets, added some claims on the northwestern extension of the claim block, and are now in the process of re-permitting the project for potential testing in 2025. We are looking for a partner to continue working on that project, and we'll see where we go as we move the project forward. The Hermanas project is a large silver and gold epithermal system, good looking veins, some very strongly anomalous mineralization. We're in the process of bonding that project, and it'll be prepared for drilling in 2024, and we will go ahead with that drilling as a function of financing. So again, why Southern Silver? We have a diverse asset package. If you want to get exposure to precious and base metals and EV metals, we offer all of that within the company. The PEA results have made the project better and are highlighting the robust economic asset of the project. The catalyst right now, updated PEA, we're putting that news out. Metal prices are always going to be a trigger for this company, and you'll see the company stock price move in relation to metal prices. So as metal prices start going up, or if you feel they're going to go up into the fall, it's a good time to get in and invest in the company. At CLM, we're going to have new drilling, and at Hermanas, we're looking at new drilling in 2024, potentially 2025. And we continue to advance both the CLM and the Oro project. And I think that's all for now for me. Thank you very much for your time, and I'm happy to take questions and see where the questions are here. So let's see. Okay, I'll make that a little bit bigger. Yeah, there's a question here. In what way and how much capital you need for the development? So is that going to come by equity, royalty, strategic partner? That's what we're trying to evaluate right now, and it's where we have a very experienced board of people that have been there, done that. There's a couple of different pathways. You can try and invest or raise equity to go and do the drilling that would be required for the development of the project. We suspect that it's going to be upwards of 20 million, maybe north of that, to bring the project to a feasibility and production decision. So you can either raise that through equity, or you can look for a strategic partner. As we put out the technical report, we're going to be reaching out and seeing if we can get a partner in place that might want to put in the big bucks to take the project to the next step. Otherwise, we will continue de-risking the project and maybe look at a time when metal prices are more favorable, reflected in our share price, where we can raise money at lower dilution to go in and advance the project. Advance the project to a production decision. And then the next question is how much capital has been raised to date? So right now we've just completed a tranche of a financing. We have a couple of $1 million sitting in the bank. We should be raising another $2 million or closing that in the next week to 10 days. And then we're going to look to the fall and see what happens in terms of the markets, again, looking for the best opportunity for the shareholder, whether it's a joint venture or strategic partner to come in. So joint venture partner, strategic partner to invest that would come in at a premium, or just simply take advantage of any upswings in metal prices and share prices to put equity into the company to complete drilling and to do further drilling to de-risk the project. And then the catalyst to re-rating. I think the technical report should involve a re-rate. We've seen that in the analysts' reports, and we expect that as we get into the fall, that we should see some re-rate in the project as people come back from holidays. And we're not sure. There's a question here on the mining industry and the new president. We're just going to have to see. And one thing that we do highlight is that we are an underground mine. We're not an open pit mine. So in terms of even all the environmental regulations that look like they're going to be coming into play, we should operate well within those environmental constraints. And so, that's about all I can say on that at this time. Stay tuned. And again, thank you very much for your time.